Hello everybody, it's very crazy times. We see that many indices, many assets are really crazy right now. They're going up and down, and that is why we are speaking with Davide Biocchi, trader from Directa. Hello Davide, how are you?
Hello, really well, doing good here from Italy. Ciao ciao to all of you.
Davide, yesterday Fed cuts rates near to zero. And my question is, it means that is as that bad that they are starting to cut rates, or they're just being cautious? What is your opinion?
Well, first of all, I can tell you my opinion, but mainly what we must trust really is the opinion of the market. So my opinion is that due to the very incredible big quantity of medicine that the Federal Reserve put into the system, the disease must be very bad. So this is my personal thought, okay? But I think that also the market was more or less thinking the same, because imagine that immediately after we know that the especially the indices futures listed it at CME, the Chicago Mercantile Exchange, they are suspended if they reach the plus or minus 5% value. So what happened was that immediately after the opening bell of the Sunday session, they were suspended, and they are suspended even right now, waiting for the opening bell that, due to the legal hour, will be 1 hour in advance, so 2.5 instead of 3.5. So the idea is that the American investors are thinking that this is very bad for the local economy, their domestic economy especially, and that's why they started selling. And then later in the night we have seen the Asian situation, and now we are looking at what is happening in Europe, so that it's very clear that the situation is very bad. So the problem is that it was the coronavirus to switch on, let me say, this situation on the market. And unfortunately, it will be the coronavirus to switch it off. So what's the real problem? We don't know when, and we don't know how much this will impact the global economy. And that's why the market are selling. Uncertainty is something that the market never likes. So in this case, if we are in an uncertain situation, investors are selling, and this is a real problem. We don't know if this is a good price to buy, it can be, or if we will buy a better price in the future. We really don't know, and this is not depending from us. This is not something that can remain into a mathematical operation. That's why also algorithm are in a real difficulty. Only the coronavirus knows, and we will have to wait for that.
Looking at the crude oil, we're seeing that it's a very low, near $30 per barrel. Well, we haven't seen this in quite a lot of time. We can see that it was about 2016.
Yeah. So 2016, when the price collapsed very soon from 100 to 26, 27 in a very fast movement, okay? But later, we have never seen this price again. So this is, it seems to me that, because imagine, all these worries about the domestic US economy and the global economy, they are now, let the investors thinking that the economy will go down and down, so the oil needed will be less and less. And that's why the prices of oil went down such a big number. In this moment, they are minus 6.5%, and the price is now down 30. So I expect it to reach again 27, 26, and then we will see.
Okay, so we can say that now it's a very cheap price for oil. We can look in for the long position, but then we look at the OPEC, and we can say that there is quite a problem, because the coronavirus is one thing, and the second thing is the OPEC and the conflict between Saudi Arabia and Russia.
Exactly. There was an inner conflict in the OPEC between the Saudi Arabia and the Russians, and so this is a real problem. So we have two problems instead of one in this case. But imagine that in a very next future, if the situation will come back to what we are more familiar with, we have a lot of stimulus in the economy. Imagine with the oil at this price, imagine with all the stimulus created by the Federal Reserve. I can think also something done by the ECB, that probably is the only bank, but this is even due to a different mandate, but they didn't do anything. So this is a strange situation. And in this case, what I expect is really that in case of something that is more familiar to us, so no coronavirus, end of coronavirus, we have all, but really all, to let the economy grow up again. Let's see.
And if we can only just look at the S&P 500, how's it going? Because we know that today also the trading was suspended because of
this is suspended, but we can expect this market to open around -7%, something like that, in line with the European market, I suppose. Okay. Well, imagine this, that if we look at the chart, imagine that there is, let me say, there are some prices here around 2000, where the market remained for such a long time. Imagine more than 1 year. So this could be a good price for a consolidation. But I strongly recommend not to consider support or resistance, it depends from the chart we are looking at, in this moment, because when the market is living a panic moment like we are right now, no support, no resistance, nothing. Only the need of consolidating somewhere a price and then to see what is new around, okay, what is really new around, and then to try to grow up a new kind of, let me say, situation that will help investors to find better situation in the future. So in a certain way, we don't need to think about the past. We need to try to see where we can consolidate and then to create and build up a new story. So this is good. And also very important is if we look at the price of gold. Can we look at the price of gold?
Yes, of course.
Because the price of gold is really now going down fast. And today, the price of gold lost the support that was around 1,525. Okay, and immediately after went down this even the other supports, and now is very close to the intermediate support around 1,450. So question could be, why in this moment in which we are really in real panic, why the gold price is going down? Because my opinion is that it's a question of which kind of asset class the investors are now looking at. In a certain way, the more researched, the more, let me say, needed asset class that we can see worldwide is now liquidity. People are really feared about this coronavirus, and they want to have liquidity in their pocket. I mean, on bank accounts, ready to go, ready to focus on some maybe future assets to buy. But for the moment, I want my money in my pocket. That's why they are selling everything. Imagine, they are not only selling equities, they are not only selling the treasuries, and they are not only selling the bonds, because the yield of treasuries and bonds is growing up. So this means that money are coming out from that. They are selling gold because they want liquidity. They are also selling, it was a terrible, terrible situation also on the cryptocurrencies. They were sold by people that want to have liquidity. So liquidity is the more, let me say, the more interesting asset class for investors right now. And that's why we can see all this environment all around us. In this moment, the favorite asset class for investor is really liquidity. That's why if you look from this perspective, you can understand all the things around us.
So now investors are like going cash. They want to have a cash.
Liquidity, cash, yes, for sure. Imagine maybe also us. We are at home in Italy. We cannot exit. So why do I need to have my money in some gold? No, in my pocket. So this is not me, but this is to explain how people is now thinking, you know.
Okay. Yes, I understand. Especially in Poland, we understand that because some of the people are doing the same thing. They want to have a cash in their pocket. Okay, Davide, thank you. Thank you very much. Thank you very much for this conversation. Thank you for this analysis. My guest and yours via Skype was Davide Biocchi, trader from Directa.